What's up, everybody? Welcome to Heresy Financial, and today we are continuing in our four-part series about how to set yourself up for success in a transition through a currency reset. Something that's happened dozens, if not hundreds of times throughout world history. If you look across cultures, countries, regimes, monetary systems, whatever, we've seen currency resets happen over and over and over again. And so if we watch history, we can determine what are some things that I can do to set myself up for success so that I can navigate through that with as little loss and as much gain as possible. And today our focus is on how to set up your daily transactions, your day-to-day money coming in and out in a way that will set you up for as much success as possible. Let's dive in. So if you haven't already and you're watching this video, go back and watch part 1 and part 2 first, especially part 2. We have a ton of info packed into that one in that part 2. It's a very long video, so watch it in chunks if you need to. Watch it on 2x speed if you need to. Although we move fast, we cover a lot of info. It's dense. And so go back and watch that one if you want to understand how to handle your investments that are outside of your retirement portfolio, because just due to laws, there are different regulations and rules on what you can do with retirement investments versus non-retirement investments. And so that's part 1 and part 2. Part 2 is really dense, so go back and watch those first. If you've already seen those, we're looking at how to set up your daily transactions here. Now, this one is actually pretty simple. The main thing that you need to do here for setting up your daily transactions is to get yourself in the mindset of understanding that gold is money. Now, there are some caveats like silver and Bitcoin and some other options, potentially new fiat currencies. But if you get yourself into the mindset of gold being money and gold being the standard, you can set up a personal gold standard for yourself. And that way, whatever happens, you'll be able to shift and change with those tides a lot easier than if you're relying on a fiat currency like the dollar. Now, the main way that this is going to come about for you is your savings. Now, most people have a couple months emergency savings in the bank. And so this is the number one thing that's going to change for most people is instead of keeping emergency savings in fiat in a bank, you keep your emergency savings in gold at home. If you absolutely cannot keep your emergency savings in gold in your home, in your physical possession, and you're looking for a storage service, never put it in a bank, never put it in a safety deposit box, never store it in one of the online unallocated services just because they're cheap, because those have multiple claims on the same physical gold. And so if you're gonna do physical storage somewhere, look for 4 things. Number 1, you're looking for allocated storage. That means every ounce has only one claim on it, and your claim is on your physical gold and silver or whatever metal, and that's it. Nobody else has a claim on yours. Number 2, you're looking for segregated. That means your actual physical pile of gold is physically separated from other sources within the vaults. So it's segregated. The third thing that you're looking for is that it's insured, and the more insurance, the better. Yes, the more insurance, there will be more cost on your part to pay for this service, but the more insurance, the better. That way, if there is some sort of fraud or theft, you're covered. And then number 4, you're looking for independently audited. You don't want these vaults to be audited by just themselves. You want them to be paying for money to have independent auditors come in and make sure that everything they say is there is actually there. Are you going to pay money for this? Absolutely. It's going to be expensive to pay for this. Is it going to be as expensive as negative interest rates and fees being imposed on your savings account, especially considering how fast your dollars are losing purchasing power? No, absolutely not. Okay, so that's your savings, and that's, your 3 to 6 months emergency savings, worth 3 to 6 months worth of expenses. That's going to be physical. That's going to be in your home if you can. And if you can't, you're looking for those 4 things: segregated, allocated, insured, and audited. And if you want a 5th thing, make sure it's in a private vault. I don't really like trusting, central bank, like the Bank of England. Make sure your gold's not stored somewhere where it's stored at the Bank of England, because, they're just, constantly issuing false data and potentially stealing countries and people's gold. And so I don't like sovereign gold vaults. Private gold vaults are the way to go, in my opinion. Make sure they're located in a country with lots of economic freedom and rule of law, not a lot of corruption, where you don't have a big risk of the government coming in and confiscating gold. So that's your savings. Now, as of now, there are not a lot of good options for storing your gold in an account which has electronic access to do bill pay and things like that from, and then receive income in dollars from like an employer and then automatically have that purchase gold. Those options right now are either rare, clunky, expensive. And so for me, I just right now, just to make things easy, I like to separate those two functions. And so I do keep some dollars in the bank that I pay my bills from, just for ease of money coming in and money going out. And any excess I'm transferring over to an easy, cheap electronic gold storage service. And so this is not a big amount of my net worth. This is for really cheap and really small transactions. And so for this service, I'm looking for a good user interface, something that has really easy online usability. And I'm looking for something that is cheap to make really small purchases and sales of gold, because I'm going to be doing lots of purchases little by little anytime my regular bill paying bank account has any excess in it. And then once that account gets big enough to where I feel uncomfortable, like, hey, if this company has fraud, or if the unallocated gold, if everybody, if there's kind of a run on the bank here with this unallocated gold service, if I were to lose that, it would hurt. Anytime I get to that point with this amount, I'm going to transfer that either to my physical private vault, and I'll either do that just by selling it and then buying more gold at my vault, or I'm going to request physical delivery from this amount, or I'm going to sell it and then buy gold separately from a local mint authorized dealer, or whatever you want. But either way, I'm going to store that up little by little in a cheap, easy way. And then as soon as that amount gets to, a couple ounces of gold even, I'm taking that risk off the table and I'm getting physical gold instead. Now, this whole time I've been saying gold, you can do the same thing with silver if you like silver better. If you think the monetary usefulness of silver is going to return, feel free to gamble on that. In my last video that I made on my price targets for gold and silver, gold has been hit already. Silver's almost there. It's the one right before this one that I just posted. I'll link it in the description below, but watch that. I talk about why the monetary usefulness, why the gold to silver ratio isn't what it used to be, isn't a really reliable indicator of what the price of silver will do. And so I like to lean more heavily on gold rather than silver as money. You can also do this with Bitcoin, and I actually highly recommend getting not a huge amount of money, but getting your system set up with a structure where you can do this same sort of thing that I'm talking about, where you're storing up small amounts that are really cheap and easy, and then transferring into a more secure storage situation. I recommend practicing and getting that structure set up just in case this shift in the monetary system breakdown that we're facing, if that does result in people moving to Bitcoin, you want your structure set up in place already so that you're familiar and you're comfortable with how to navigate that. If it shifts to silver or gold or whatever, you want those options there for you already so that you're not caught off guard and caught by surprise like most of the population. You have that system set up for you. And so it's good to be able to figure out how to operate outside of the banking system, storing up Bitcoins slowly and little by little, stacking sats in a way that's cheap and easy with a cheap and easy online service like the Cash App by Square. And once you get enough where you think, hey, I'm uncomfortable with how much is there, then getting that moved into cold storage. Getting yourself comfortable with that process is really important to get the structure set up so that whatever happens on the other side of the collapse of fiat here that we're about to face, you have the means set up to succeed in the new monetary system. Now, the last thing that we're talking about today is debt. And I talked about debt regarding investments in my last video. And so we're not talking about debt regarding investing here in this video. What we're talking about is your day-to-day debt and how to treat day-to-day debt, because I get a lot of questions in the comments on, hey, I owe a lot on my car, I owe a lot on my credit card, we're seeing inflation, is it smart to pay off debt, or should I hold that debt and hope that the inflation helps me pay it off? These are all great questions, and there's really one rule of thumb that still stands. If the debt paid for an asset, it's probably good. If the debt paid for a liability, it's probably bad. Now, I love Robert Kiyosaki's definition of assets and liabilities for this purpose, for the purpose of looking at debt, which is just cash flow, specifically cash flow above and beyond the cost of debt service. And so if the debt's used to buy a rental property, there's absolutely no way I'm paying off a rental property mortgage right now. But if I've got a ton of credit card debt and I'm carrying a balance and I'm getting charged 15, 20, 25% interest, and what I bought with that credit card is food and gas and vacations, there's absolutely no way I'm carrying a balance on that. And so if you've got credit card debt, you're carrying a balance and you are paying interest on that, I know that you didn't use your credit card to buy investments, to buy assets. You use that to buy liabilities, things that are costing you money. So do whatever you can, cut up the credit cards, pay it off as fast as possible, because you are losing money and inflation is not yet outpacing the cost of debt service on those credit cards. And credit cards are variable interest. And so if inflation does tick up to the point where all the banks and financial institutions realize it's 20, 30, 40, 50%, your credit card interest rate is going to go up. It's not like a mortgage, which has a fixed interest rate. And so there's no way I'm carrying a balance on credit cards right now. It is just not worth it. Your points are not making up for what you're losing on paying that interest. Now, cars are a tricky one right now because it's pretty easy right now to get a car with 0% interest, although I'm still leaning on the side of the typical, like the Dave Ramsey advice here, which is don't use debt to buy a car, because instead of giving you an interest rate on your car loan, they're just jacking up the price of the car. And with cars especially, I've talked about this before, I think the market is going to get flooded with a bunch of really cheap cars within the next 6 months to a year. And so I don't think it is a smart move at all to have debt on a car. If you have debt on a car right now, in my opinion, I'm getting rid of that. I'm trading down to a really cheap junker that works. You're never going to pay more in maintenance on an old Toyota or an old Honda as you will on the depreciation plus the maintenance on a new car, especially when you factor in if you have a loan on that car. And so it's not an asset. A 15-year-old Honda Civic is going to get you just as well from point A to point B as a brand new BMW will. And so if it's a financial decision for you and not just a, hey, I like to drive this car and I can afford it, debt on a car right now, not a good plan. And then we get into some gray area where you might have some student loans that are subsidized or really low interest, and you're considering, hey, I've got a bunch of money in my account that I could pay these off with, or I could just pay the minimums and use that cash for something else. You really have to measure from a real measurement perspective on what you are going to be doing as an alternative. What's the trade-off? And so how much am I paying on the interest, and how much would I get, how much cash flow or return would I get on an investment that I put this in? And if there's an arbitrage play available to you where you could make more on income from an investment than you pay on the interest, you can collect the difference. Fantastic. If you run your own business and you've got the ability to take on a business loan right now at a really low interest rate, and you know that you can, expand your business, there's no problem right now with loading up on debt for productive purposes that are going to produce a return above the cost of servicing the debt, just strictly because we're entering into this super inflationary environment right now where it's going to make it easier and easier and easier to pay off debt that was used to purchase things that are inflation protected. Things like products and services and food and sales and growing your business and stocks and gold and real estate, things that will go up in value or produce higher income from inflation. If you're using debt on that, that's going to give you leverage in addition to the fact that you have an arbitrage play between the cost of the debt plus the return of the investment. And so there is a gray area there. You're going to have to do some calculations and some individual decision making there. There's not a clear-cut answer on that kind of debt, whether that kind of debt is good or bad for you right now. For instance, it might be good for you to load up on some high dividend paying ETFs. You buy some puts on them so that your value is guaranteed. You sell some calls on them to pay for those puts so that your insurance costs you little to nothing. And then you collect a dividend on those ETFs. Meanwhile, you're holding that account at a brokerage firm that offers a really low margin rate for you. So you've leveraged up your account and you're collecting dividend income on a position on a portfolio that is much larger than you'd be able to afford if you were just buying that ETF by yourself. Now, obviously, that's a little bit of an advanced strategy. So if you don't understand how to use options, If you're not comfortable with using margin, if you're not comfortable with investing in ETFs or the stock market right now, I'm not recommending any of that. I'm just saying, hey, that's an example of a way that you could use debt. You could open up a margin account with, a 3 to a 4% margin interest rate. You get some ETFs that are paying you 6, 7, 8% dividends per year. You leverage that up and then you protect the downside with some puts. That's just an example of a way that you could use debt to produce an arbitrage situation there for you, where the income you're collecting is higher than the cost of servicing that debt. All right, we got into the weeds a little bit there, and I know I started talking about debt for investing, and I said I wasn't going to do that, but that is the way to kind of structure your day-to-day money in, money out. Make sure your savings, you're treating your savings as gold or silver or Bitcoin if you want, but I like gold for my savings, and that's physical. If you can't have it at home, private vault storage, it's allocated, segregated, insured, and independently audited, and in a country with a high degree of economic freedom. No more cash in the bank than you absolutely need for your monthly expenses. Any excesses I'm transferring out into a really easy to use, really cheap online service that allows me to accumulate small amounts of gold, silver, or Bitcoin at a time. And then once that amount gets up to a level that I'm uncomfortable losing, then I'm going to transfer that out, either buy more physical gold or silver with that, transfer that Bitcoin out into cold storage. And so I'm using that to set up a structure for myself that allows me the opportunity to start to operate outside of the banking system if I need to, and allows me to easily, slowly, cheaply build up a store of wealth that is not built on fiat currency like the dollar. And I'm only using debt in order to short the dollar, meaning I'm using it to buy something instead that is going to outperform relative to the cost of the debt service, which means I'm not using credit cards, I'm not using debt for a car, and I'm using debt in a smart and a wise way for investing with proper risk management techniques. And if you want deeper info on that, again, if you haven't seen it, watch the investing video, part 2 of this series. The next part of this series is going to be how to establish kind of an escape plan for yourself just in case things get really bad. If you liked the video, please hit that like button for the YouTube algorithms. It really does help. I appreciate you guys. Have a great day.